Hello, welcome to my channel today. My name is Emma Henry. It's so good to have you. So good to have you. So good to have you. Juve Trades misses you, and I've missed you too. So how have you been? I want to believe you're fine, and I'm sure you're making a lot of blues in your trades. Okay, so today I want to talk about basket indices, and this is just an introductory course. So if you are a regular subscriber, regular visitor, somebody recommended the channel to you, I want to say thank you for visiting. Please do well to subscribe and also turn on the notification button. You can share the video with as many people as you can. And for educational purpose and content, you can always fall back on this channel, who will always try to post something very educated for you. And that is to buttress the fact that we've progressed beyond trading just boom and crash to adding other financial assets such as step indices, volatility indices, basket indices. So today we're going to talk about basket indices. And funnily enough, we've also added currency pairs. So in no time from now, don't be surprised if you see content on currency pair too. Okay, this channel is primarily for educational content on financial assets. Okay, so what is basket indices? Let's go right there. Okay, so in the year 2022, Deriv, the broker that I use, introduced an asset that is called a basket indices, or some people might say a basket index. And when they introduced this asset, the asset was tilted to the financial aspect of Deriv's trading platform, which comprises the currency pair, that's the Forex major, Forex minor, the Forex exotic, the equities, and the cryptos. But I think after a few months, they shifted it to the synthetic aspect that contains the boom and crash, the step, the volatility, the range break, etc. Okay, at first, I thought they shifted it primarily because they wanted to increase the number of tradable assets, which was actually true. Because as at then, I think synthetic indices comprised about less than 50 assets. But as we speak, they are up to close to 50, if I'm not wrong, because they've introduced new markets such as the DEX, the basket indices, and the other aspect of synthetic indices. So basket indices, like we know, is just a basket which contains so many currencies. We all know what a basket is. It's a container. Some people can call it a reservoir or a store. So having a reservoir that is made for currencies is what actually makes what a basket indices. So you can look at this picture here. Can look at this picture here. So you can see the basket that has what? So many currencies here, primarily the dollar. All right. So looking at that, Deriv decided that their basket indices will comprise the following: AUD basket, that's the Australian dollar; the EUR basket, that's the Euro dollar; the GBP basket, that's the pound; the USD, which is the US dollar; and then the gold. Now, basically, the gold most times is being categorized into what people call the commodity basket. But Deriv decided to bring all of them under basket indices. And then each of these basket currencies are equally weighed with 20%. So, for example, the AUD basket comprises 20% of USD, Euro, Pound, Japanese yen, and Canadian dollar. All right. So what's the beautiful thing about this? Okay, basket indices, like we've just seen from the previous video, if you have a good knowledge of currency pair, you know that currency pairs primarily comprise a best currency and a quote currency. Okay, so in the same way, a basket index, for like we looked at in this case, like the AUD here, like the AUD. So we can see that the AUD here could serve as the best currency, while these other ones could serve as what? The quote currency. Okay. So that's why I had to bring up this graphic illustration here. that shows that in basket index, we can have the best currency, which is the AUD, and then the quote currencies, which is the USD, Euro, Pound, Yen, and Canadian dollar. What is the essence of having this? Now, in currency trading, we all know that currencies are being paired. That is because to trade foreign exchange, like the exchange, there must be a medium of exchange between two currencies. So it's either the value of one currency rises while the other one depreciates, or the value of both will rise, or the value of both will fall. So in either of those cases, what happens is that the price will either trend or range. When I say trend, the price will either have an upward direction or a downward direction, or the price will range, will be a sideways movement. So in the same way in basket indices, where we have the best currency and the quote currency, people usually create this type of indices to trade primarily for so many reasons. Because for example, somebody that loves the AUD currency, like the Australian dollar, might want to relate it with what happens with currencies such as the US dollar, the euro, the pound, the yen, and the Canadian dollar. The essence is because they want to create a kind of synergy that they can say, okay, if the value of AUD rises, can we relate it to what will happen to the value of USD, Euro, Pound, Yen, and Canadian dollar? The essence is to determine either the price is going to go up or downwards, or they're going to hedge. Okay, so that leads me to the next point. You can see here that in trading basket indices, the best currency will have to be traded against the quote currencies. Okay, so like what Deriv offers is that AUD has its own quote currencies, like you can see here. The same way with euro, the same way with pound, the same way with United States dollar, and then the gold basket. All right, now you can understand this properly when you realize that basket indices is not just like every other kind of pair. Okay, so to trade it, you need to understand how it works. For example, I said here in this point that an increase in the value of a base currency leads to a decreasing price value of the quote currencies, and vice versa. What that simply means is that when the value of AUD increases, what happens to the value of USD? What happens to the value of EUR? What happens to the value of pound, yen, and Canadian dollar? Traders might say that's where the knowledge of currency pair correlations come in, and a good knowledge of fundamentals, and of course a long-term view of the technical analysis, where a trader has to have a good view and a proper broad understanding of this pair. So in situations where the value of the base currency increases, for example, US dollar, are we going to say that the quote currencies such as euro will be on the same direction, or is it going to be on a counter direction? If US dollar, for example, increases in value like we see here, what is going to happen to pound and to pounds? Let's just say US dollar increases and pound falls. What that means is that if you pay the GBP and the USD together, it means the price is going to go down. So in such a case, you're going to do what? Sell. So when you sell, for example, pound dollar, of course, pound dollar and euro dollar almost move in the same direction. What's going to happen is that we are going to have something like this. Okay, we're going to have something like this where we can have, let's just say we sell in the same direction. So of course, pound dollar will be also in the same direction. So what about dollar yen? Is going to be in a counter direction. In other words, let's just say when you sell euro dollar or sell pound dollar, you can buy what? Japanese yen, and then buy dollar CAD, and then buy dollar Aussie. So in situations where this does not actually go up, because we are talking about a good knowledge of the fundamentals and a good knowledge of the technical analysis, in situations where this does not play out as you might assume or forecast, all right, that is where the second part of this comes in, where a trader is permitted to do what? A trader is permitted to hedge. Okay, so I said here, in situations where the trade goes against a forecast, the trader can leverage and hedge the account due to numerous currencies traded. So that's the advantage of trading a basket indices. So you have the privilege to trade as many currencies as you want, weighted equally, and then you can hedge it if price does not go according to your primary forecast. That means you have less losses, less volatility in the market, reduce risk, and of course, more assets to trade. Okay. Now, the second way you can also trade this guy is that you need to have a good knowledge of your technical analysis. You cannot do without technical, fundamental, and sentimental if you're going to be a good basket index trader, because this asset flows directly with currency price. So you need to know what's happening in the currency market. And for a good knowledge of fundamental analysis, you can make do with websites such as myforexbook.com. You can also make do with forexfactory.com and bloomberg.com, etc. There are many others, but those are the three I actually fall back on. Okay, a good knowledge of the technical analysis talks about two things: the price structure, number one, and the key levels, what I call zones or points of interest. Okay, so I'm going to take us to our browser straight where we're going to look at these two. Price structure, basically what we're looking at is higher highs and higher lows, or is it a range? So when we say higher highs, higher lows, lower highs, lower lows, what does it mean? It means the price is trending. So let me print here, trending with higher highs, higher lows, or it's ranging. Okay, so in indicator trading, we have moving average crosses. So let's look at that in our so I use this guy, tradingview.deriv.com, to do my analysis for every Deriv offer, assets that they offer, except currency pair where I use the real trading view. Okay, so we're going to look at this and know what's happening. Okay, so we just go straight to look for our basket indices. So let's look at pound index or dollar index. Let's pick one. Let's pick euro. Okay, so looking at this guy, remember what we talked about? We are looking at price structure. Okay, so let's look at price action first, where the market will trend with higher highs and higher lows, or it's gonna range. Okay, then we'll go straight to indicator trading, and then we can look at key levels. Okay, so looking at this guy, we can see that this is a daily time frame. You can see 24. So we can see beautiful uptrend, okay, with massive higher highs and higher lows. So that's it. Okay, so I think I should just use this other trend line instead. It will save the stress. All right, perfect. So I'll use this, then produce, keep it there. All right, then we have another one here. We have another one there. Okay, so and then something here. And then, of course, let's move over here. Over there. So all of these are places where price has broken structure and they're playing out perfectly. And then we moved over to this point. So let me just get this point over there. Okay, I think from here it went over here. Let's just drop it there. And then this guy, what? So we can see a beautiful uptrend, higher, 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 always moving like a staircase, an ascending staircase. That's how it's moved. Okay, so I can put it up that way. Hesh. So, all right. So we keep pulling up those guys to that point. Okay, so and then as well edit this one to HL. We continue from where we stopped. Sorry for that. Okay, so and then all the way up, all the way up, all the way up, and it continues that way. Okay, so this is where we talked about higher highs and higher lows, a beautiful progress. Now, even when the price was still making successive higher highs and higher lows, I observed that we also had a sideways movement here, which is what we called a range. Okay, so I can afford to take this away and this away and this and this and this. Okay, so this was where we had our range, still within while the price was moving until we had this breakout that led to that. Okay, so when you're looking at understanding how to trade basket index using technical analysis, we consider certain key levels such as price structure, where we have the price trending or ranging. So in a trending market, what do you do? For example, in an uptrend, you look for buy opportunities like this. Okay, now this is a beautiful range here. And when the market is either ranging, there are two ways to trade it. Is either you leave the market or you choose to trade it using the upper limit and the lower limit boundaries. Okay, so if you don't know how to trade a ranging market, watch out for my video that will come up next week on how to trade a range. I think I might even make a practical setup for you to see where I take some trades on how to trade a range, because a higher time frame range that you can find on a daily like this will definitely be a lower time frame trend. Yes, like M5, it will trend in M5 and M3 and maybe M15. So what you need to do is to just know how to trade the range. So watch out for my video next week that's coming up on how to trade a ranging market. Okay, the second aspect is if you're an indicator trader, so we can look out for price structure using what moving average crossovers. So we can look at moving average. Right, so this will demand that you use maybe two moving averages. So you can see this line that comes up here. So I like my moving average to be on 20 inputs. I like it on 20. And then I like the smoothness on 22. I like it on exponential EMA. So I'm going to write that. And then I'm going to bring in the second one. Okay, so here we go. So I like the second moving average on period 200. Yep, because it serves some stress. I like it on EMA and I want to change the color to black. All right. So that's it. All right. So if you observe these, for people that are indicator traders, I talked about moving average crossovers. Okay. So what are moving average crossovers? This is the best description of what a moving average crossover looks like. Let me take out these guys for now. Okay, so you can see at this point here where we had this, where the red, the black, that's the 200 period, and the 20 period, which is the blue, crossed over themselves. This is where you had the moving average crossover, and that was the signal for something, a signal for an uptrend, a buy. Okay, and you can see the market has been actually buying since then. All right, so this is just how people trade basket indices, either following price structure, higher highs and higher lows in a trending market, or lower highs and lower lows, or they range it and then they trade the upper and lower boundaries, or they use an indicator such as moving averages to trade. Okay, and then either of these two comes with what we call key levels, zones, or point of interest. Okay, so let's look at zones in price action and zones in indicator trading using moving averages. Okay, because those are the two successful ways every professional trader trades using these methodologies. Okay, so let's look at, for example, let's start with the moving average. The key level basically will be, or what people call zones of interest, will be regions that are close to the moving average. That is primarily for the point of entry and for the point of exit. Okay, so let me take this to maybe 1 hour. Let's look at what happens within 1 hour. All right, interesting, amazing. Okay, so you can observe how price moved here. Okay, so look at this. The price came, touched the moving average. So the moving average here acts as a dynamic support. Okay, so when price comes close down to the moving average, and then what happens? You are expected to at least do what? To buy from that point up. Okay, and then it came up here and broke. So once the price exits the 200, like goes below, the candles go below the 200 period, you are permitted to do what? To exit that trade. Okay, so until then you keep holding the trade. So since we had the moving average crossover here at this point where you can see price has actually been flowing up. So this is the zone of interest for every price indicator trader, where the candles come close to the moving average. Now, another thing I need to say is that if you are a moving average trader, when you see this type of wide gap, it signifies high volatility in the trade. That simply means that we have volume in that market. So the rate at which the buy trend will move will be much swifter than it should usually occur, as compared to when the volatility starts cropping in this way. Okay, so for people that are price action traders, how do we trade this? So permit me to take away my moving averages. Okay, how do we trade this? We basically draw what we call zones or key levels, and that has to do with our higher highs and our higher lows, like I drew before. So for me, I like to do this. So these are key levels. Remember our higher highs and higher lows? They are what we call key levels. So these are zones that price has retested before. So some people might choose to trade support become resistance, resistance becomes support. Either way, you are still on advantage. For example, let me look at this. Okay, so all right, so we see that. Okay, so let me use this instead. Let me use my rectangle instead. So you can see that zone, all right, where your support becomes resistance and your resistance become support. Here's another peculiar example. All right, so these are what people call key levels or key zone. And the ideology here is that once price has tested a particular zone more than twice, that zone is a reliable spot. Okay, so you can see here that price tested this here one, and then came back here, and then did what? Came here, broke, and then came back here, and then move. So in the resistance zone, you sell. In the support zone, you buy. So when resistance becomes support, you buy. When support becomes resistance, you sell. So here's a support zone becoming what? Another support zone. So here's a support become resistance, become resistance, become resistance, and then it became what? A support. So here are key levels that people can actually use in trading basket indices. Now, if you know that this content has actually been very, 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 very helpful to you and has helped you grow your knowledge, please do well to subscribe to the channel and turn on your notification button. Remember, by next week, I'll be uploading another content on how to trade a ranging market. I don't want you to miss it because it's going to be very educative. Thank you once again for the time. Thank you for being here. Thank you for staying to the end and for watching to the end. I appreciate you. Thank you once again. Have a great day ahead. See you on top.